If you own crypto, trade NFTs, or even get paid in digital assets here in the UK, listen up. The way you handle your tax is about to get a massive shakeup. What's coming in 2026 isn't just a small change, it's a complete overhaul, and you absolutely need to be ready for it. So let's break down exactly what's happening. So let me ask you a quick question. Do you have any Bitcoin? A bit of Ethereum? Maybe you've bought or sold an NFT? If the answer is yes to any of that, even if it's just a small amount, then what we're about to cover in the next few minutes is, quite frankly, essential viewing for you. Now, to make sure we get this right, this entire discussion has been developed with the specialists over at My Tax Accountant. They are absolute experts in this field, and they've been tracking these changes from day one to give us a clear, no-nonsense guide for getting ready for this new era of crypto tax. All right, here's our game plan. First, we'll cover the big change itself. Then, why this is all happening now? It's a global thing. After that, the really crucial bit, what HMRC is going to know about your transactions. We'll go through the key dates you need to circle in your calendar, give you a solid action plan for 2025, and finally, talk about where you can get some expert help. Okay, so let's dive in. For years, let's be honest, crypto tax has felt a bit like the Wild West, right? It was kind of down to you to figure it out, declare it, and there were a lot of gray areas. Well, I'm here to tell you, those days are officially over. The party's ending. And here is the single most important thing to understand. From 2026, the responsibility for reporting is shifting. It's moving away from you having to tell HMRC everything to a new system where third parties, your exchanges, will be telling them for you, automatically. Procrastination is just not an option anymore. So you're probably thinking, why now? What's the big rush? Well, the thing is, this isn't just a UK thing. Far from it. This is part of a massive, coordinated global crackdown designed to bring crypto into line with the traditional financial world. And the engine behind all of this is an acronym you're going to want to remember, CARF. It stands for the Crypto Asset Reporting Framework. Basically, it's a new global rulebook that over 100 countries, including the UK, have signed up to. Its whole purpose is to make information on crypto transactions flow seamlessly and automatically between tax authorities worldwide. The easiest way to wrap your head around this is to think about your normal bank account. You know how your bank automatically tells HMRC about any interest you've earned? Well, CARF is applying that exact same logic to crypto. Soon, your exchange, whether it's Binance, Coinbase, whoever, will be legally forced to report your activities straight to HMRC. Which brings us to the real heart of the matter. What exactly is HMRC going to know? This is where everything changes. They're basically getting a direct, automated data pipeline right into your crypto world. The days of tax obscurity are well and truly gone. The process is almost frighteningly simple. It works like this. Step 1, you do something on an exchange. You buy, you sell, you swap crypto, maybe even just move it. Step 2, the exchange scoops up all the data on that transaction. And step 3, they bundle it all up and fire it straight over to HMRC automatically. No fuss, no friction, just a constant stream of your data. Okay, if you're going to pay attention to one thing, make it this. This is the exact information your exchange will be sharing. Swapping crypto for pounds, they'll report the total amounts. Trading one crypto for another, they'll report the type and how much you traded. And here's the big one. Transferring crypto, they'll report the amount and the wallet addresses. On top of all that, they're sending your personal details, your name, address, tax number, and date of birth. There's literally nothing left out. Now, let's make this feel real. Think about a freelance designer in London, someone who occasionally gets paid for a project in Ethereum. They might not see themselves as some big crypto trader, but under these new rules, every single one of those payments that lands in their exchange wallet, reported straight to HMC. This is a complete game changer for anyone self-employed. So we've covered the what and the why. Now let's talk about the when. Because this isn't some far-off fantasy. The countdown is on, and it's happening fast. So grab a pen, because you need these dates in your diary. Right. It is November 2025. This, right now, is your final window to get organized. Then, on January 1st, 2026, the switch is flipped. The new rules are live, and exchanges start collecting all that data we just talked about. Stay with me. The next point might surprise you. The exchanges won't actually send that data to HMRC until early 2027. But, and this is the crucial part, that first report will cover all of your activity for the entire year of 2026. So just let that sink in for a second. 2027. That's when the first huge data dump lands on HMRC's servers. That's when their algorithms will start worrying, automatically comparing what your exchange says you did with what you actually put on your tax return. Any differences will be flagged instantly. Okay, I know that all sounds a bit intense, but don't panic. Now we get to the most constructive part, what you can actually do to prepare. This is your action plan. It's all about getting your house in order now in 2025 so you're not scrambling when this all goes live. So here's a pro tip, a readiness checklist straight from the team at My Tax Accountant. First, get your records together, and I mean all of them. Second, for every single asset, you need to know when you got it and what it cost you in pounds. This is vital for your capital gains. Third, make a note of what each transaction was for. Was it an investment? Were you paying for something? It matters. Fourth, pull all this info from every single wallet and exchange you've ever used into one place. And the biggest tip of all, start now. Seriously, do not leave this until 2026. Just to really hammer home how big this shift is, before, you could get by with maybe some spotty records. From 2026, it has to be meticulous, transaction by transaction. Before, it was on you to declare. Now, your data is being checked against automated reports. The risk of getting caught out has gone from low to extremely high. And that's not all. Here's where most people go wrong. They completely underestimate how long it takes to pull together years of scattered transaction history. So, we've covered the problem, the reasons why, and what you can do. But let's be realistic. For most people, this is complicated stuff, and the penalties for getting it wrong can be pretty steep. And that is where getting some proper professional help is a really smart move. So, looking at that checklist, are you feeling a bit overwhelmed? Are you worried you might miscalculate your gains, or you have no idea how to deal with things like staking rewards or DeFi? If you are, trust me, you are not alone. This is complex tax territory, and these new rules have just added another thick layer on top. But the good news is you don't have to figure it all out by yourself. For a change of this scale, expert help is absolutely key. The specialists at My Tax Accountant live and breathe this stuff. They can help you get compliant and make sure you're not paying a penny more in tax than you need to. Give them a call on 0208-570-8531. That's 0208-570-8531. Or you can email them at info@mytaxaccountant.co.uk. Sorting this out now will save you so much headache down the line. And just one final, very important point. Please remember that everything we've talked about here is for general guidance. It is not official financial or tax advice. Your own situation is unique, so before you make any decisions, it is absolutely essential that you speak to a qualified professional, like the experts at My Tax Accountant. Thanks so much for your time.